Welcome to day 3 of the boot camp, and we were going to talk about the technical side of indicators, but today I want to just go right back to candlesticks because I felt like last video was a bit rushed and I want to give you more in-depth information on candlesticks, because at the end of the day, guys, candlesticks is the most important thing when you're looking at the charts, right? You're not going to see the indicators, you're not going to see support and resistance, you're not going to understand anything if you don't actually understand the simple protocol of candlesticks. So that's why I'm going to spend around, hopefully it's around 15-20 minutes, not too long, on candlesticks, and I'm going to break it down to you. And then what you can do is maybe screenshot or follow it through or draw it out yourself and use it on a day-to-day basis. Okay, so before we get started on candlesticks, we need to understand how a candlestick is formed. Okay, so like I said yesterday, we have the open, right? So we have a point in the area, sorry, the point in the market, right, which is going to be called open. Okay, and we'll call this market open. Okay, now when this market open occurs, right, price starts to move up and down. Okay, so price starts to go down, starts to go up, and it keeps doing that, right? It keeps doing that. And then when the candlestick closes, let's say, for example, in this case, candlestick closed right here. Okay, so price ended up coming down here. Candlestick closes, so market close, right, at this point. Okay, now, as a trader, we need to understand what the open is and what the close is. So we understood that market open was here, and market open was here, and market close was here. So what would happen is we would get something called a body formed. Okay, so if I just rub this out, and this is called a body. Okay, so what has happened is the market has an open, has a close, and a body is formed once the market has closed, and you then get to see a closed candlestick. Okay, so while the market's moving up and down, then you see the candlestick moving up and down, but once it's closed, it forms this body, which then is is basically the average area of where price moved, right? So we'd have like some sort of line here, some sort of line here. So after we see this, obviously that's what we're seeing while the candlestick is forming, but in the end, we're basically seeing this. Okay, now this is the close, this is the open, remember, and then this is the body. Okay, now what are these two lines on the top and the bottom? The two lines are, the top one is a wick, this is also a wick, right? These two lines are wicks. Okay, now, we need to understand wicks as well, because just because we had a body form where majority of the market was in this body, we also need to understand that price has some sort of room to go to these wicks. Okay, now later on, I'm going to show you why these wicks are very, very important. So this is if the market does this, okay, just know that this would most likely be a bearish candlestick. Why? Because price has moved down from the market. Okay, so when it's open, instead of going up, it's gone down. So the reverse would be, if I draw another candlestick, this will be the close, this will be the open, let's just say like this, and this is obviously the body, and this is obviously the wick. This whole thing would be a bullish candlestick. Now, when we look at the markets, unfortunately, the markets will not be as easy as this. Okay, we're going to see different sizes of candlesticks. We're going to see different ranges of wicks. We're going to see the candlesticks are not going to be like this every single time. Okay, so what we need to understand is the top 3 candlesticks. Okay, now, as a day trader, I've been trading for around 5 years. I've minimized it to 3 styles of candlesticks. Okay, and the 3 styles of candlesticks are the normal candlestick, which I would say is a momentum candlestick. Normal momentum candlestick. Now, it doesn't matter if it's bullish or bearish. Okay, so I'm going to continue it in white. Doesn't matter if it's bullish or bearish, but it's just this normal generic candlestick where the body is larger than the wicks. Okay, so key note is body is larger than the wicks. Okay, and number two is the body is long. Okay, or big. Okay, so when we see this is just a normal momentum candlestick. So usually after this normal momentum candlestick, what we would see is price just going in that direction. That's what we would see in this normal momentum candlestick. The next one will be a indecisive candlestick. Okay, now with this indecisive candlestick, it will be like this. Okay, where the wicks are longer than the body. Okay, the wicks are longer than the body, and also the body is short or small. Okay, usually when this happens, we see that price is slowing down. Okay, this is like an indecisive. It doesn't know whether it's bullish or bearish. It's kind of in the middle of the wicks, and the wicks are longer than the body. Okay, and the body is very, very small. Okay, usually this is what you would see, and it would be like a slower momentum or it's time for a reversal. So those are the two things, right? Price slowing down, or time for a reversal. Now, when price is slowing down, that's just an indication to us that, look, sellers or buyers are closing their positions. Okay, that's just what it is. That's what the indication is. So for me, if I see an indecisive candlestick, for example, I would look at the charts and say, okay, cool. Is there still bullish or bearish momentum? If not, that's fine. I will close my trade and move on to the next if I see this, right? Now, if there is a bullish or bearish momentum, then we would hold it. But if there's not, we will close it. Okay. Now, the last one, which is kind of like our candlestick formations, which we'll see, the candlestick cheat sheet, right, from yesterday's video, is the reversal candlestick. Now, the reason why I call this a reversal candlestick, right, is because, okay, number one, body is small. Okay, number two, wicks are long on one side. On one side. Okay, number three, there's a lot of pressure. Lots of opposite pressure. Okay. Now, what we mean by this is, let's just say, let me just draw out this candlestick again, right? What this candlestick defines us is that price is bullish, right? Price is pushing upwards, right? Remember, this is the, let's say, for example, this is the open. This is the close. We're seeing a huge push to the upside, but we also need to understand that just because there's a push to the upside, we could, one, it could mean that prices just continue to go up, or two, lots of people sold at this area. Lots of people were buying at this area. Okay. The second thing is that not only was there bullish pressure, is that price can easily come back to the zone. Okay. That's another thing we need to understand. Price can easily come back. Why? Because it tested out the sellers, right? It tested out. Is traders going to continue the sell run? No? Okay, we're going to push it back up. But what price might do is come back to the zone to retest to see if buyers are actually wanting to buy or not. So usually when you see these kind of candlesticks, it's not just going to be a straight reversal, but what we could see is price coming back to that lowest point of the wick and then continue to go to the upside. Okay, and likewise for the reverse of that, which is like this, we're seeing selling pressure. Okay. Not only are we seeing selling pressure, is price has tested out the sellers in this case, right? We did have people buying, but it tested out the sellers. The sellers succeeded, and the price has gone down. But that doesn't mean that sellers are in control just yet. What it means is that price could easily retest that zone for us to continue the run to go to the downside. Okay, that's as simple as we can make it, right? And in tomorrow's lesson, we'll look at the markets, but within today, I want to make sure that we're just going based on candlesticks by itself, candlesticks 101, right? And you can see that we understand what is what is a candlestick and how it forms. Not only have we seen how a candlestick is formed, we're seeing the bearish and bullish candlestick, right? Then not only that, we're seeing the top three candlesticks, which are the momentum candlestick, the indecisive candlestick, and the reversal candlestick. Now remember, guys, these are not candlesticks that you just look at and you place a trade. Okay, these are candlesticks that you have to make sure that you're looking at and you're having an eye on price overall. You can't make a decision based on one candlestick unless it's on a higher time frame, but even that, you wouldn't make it on one candlestick, right? You need to bring the candlesticks together as a story and understand, right? If you see a bunch of reversal candlesticks, understand that price is most likely going to reverse, okay? If you see a bunch of indecisive candlestick, just know we're going to see an impulsive move in the next few candlesticks. If you see a momentum candlestick, just know that price is most likely going to continue to go to that side unless it follows through with either an indecisive or reversal candlestick, okay? Guys, I need to let you guys know that just because I'm showing you candlesticks, right, and I'm going to show you strategies, I'm going to show you everything else, you need to keep looking at the market. So today's homework, I need you guys to really actually do this, is go to the markets and stare at every single candlestick. Understand what candlestick would be next and why that candlestick happened, right? Understand why and understand how you can interpret the candlesticks, okay? So the task that I did when I was trying to understand candlesticks is I used the backtesting tool, or what I did is I looked at a candlestick and I predicted what the next candlestick is going to look like based on that candlestick and based on the previous candlesticks as well. And I tested to see if I understand candlesticks and can I predict the next candlestick, okay? Now, you're going to get it wrong a few times, but you'll get to see a pattern. You'll understand that, okay, price does a, let's say, for example, an indecisive candlestick. What happens? We then see some sort of momentum candlestick right after, okay? Price is a reversal. What do we see next? A momentum candlestick. Price is a reversal and indecisive. What happens? We see another momentum candlestick. That's basically all the candlesticks in one. It's not going to look like this to a T, but what we can do is utilize this information and practice, okay? So like I said, guys, as for homework, right, I need you guys to look at the market, stare at it, and understand candlesticks. Understand each and every candlestick, because in tomorrow's lesson, I am going to go through the technical side of the markets, the technical indicators that can help us within the markets, okay? So yesterday you got the cheat sheet. Today we went through Candlesticks 101. Today was actually meant to be the technical indicators, but I saw that yesterday's video, we didn't really go too much on the basis of candlesticks. And my goal is to make traders like you become profitable. Even if you have knowledge or no knowledge, I want to make sure that I'm covering everyone. So I understand yesterday I kind of rushed through the candlesticks, and that's why I specifically made the video today for this. But tomorrow, guys, we are going to look at the markets. We are going to look at the candlesticks, and I don't want you guys to be confused when it comes to the markets, okay? So what I want you guys to do is tonight, and I normally upload in the evening in the UK. So what I want you guys to do is actually look at the markets, and when tomorrow's lesson is uploaded, I want you to be ready to look at the markets, because I don't want you guys to be confused, okay? So on that note, guys, we're going to end off the lesson here. Tomorrow's boot camp, like I said, is technicals. We're going to be looking at the charts. It's going to be really, really fun. So make sure you are ready to look at the charts. Make sure you're prepped, and let's get tomorrow started. See you guys tomorrow.